Okay, good evening, ladies and gentlemen. It's your boy Trap King, and tonight we are going to be looking at traps. As a matter of fact, tonight is a night we are willing to open up our indicator, the trap indicator, to let everybody know that it's out there. Tonight is that night. So, what I'm going to be doing basically tonight is I'm going to teach you guys how you can use the indicator and what whatever you see on the chart will represent whenever they appear. That's number one. And then secondly, this is going to be for takeaway. I'm going to do an analysis on GBP USD alongside the dollar index. So, first things first, let us start. Okay. So, okay, good. So let me just put it in. Good. That's my indicator. I'm going to start from here. Now, for everybody that has ever traded traps with me, you already know the drill. Traps, what are we looking for? We're looking for an engulfing candle to engulf a minimum of two candles, a minimum of two candles to its left, minimum of two. In other words, you have an engulfing candle like this, and then it should engulf a minimum of two within its opening and its closing price. This is a bearish candle. Let me get rid of, let me just take away let me put it out so that everybody can see. The black candles are bearish candles and the green candles are bullish candles. So a bearish candle, the open price is going to be at the top of that candle because the bearish candle is a sell candle, and then the closing price is going to be down. Now, everybody knows, for those that have been following me, the rules are quite simple, right? So I'm going to do this. Yeah, here. There you go. This is it, right? So within this opening and closing price, now if you look to the left, I'm going to zoom out in this zone here. We're talking about details right now. Now, looking to the left, you will notice that this bearish candle, this bullish candle did not close outside this zone. So it validates up here. And down here, if you can see, it tells me that we have 1, 2 inside this zone. Now, this doesn't include any wicks. No wicks. But then if you see this third candle came all the way down there. So it didn't engulf this third candle, but only engulfed 1, 2. Now that it engulfed 1, 2, what are we going to do next? Now that it has engulfed only 2 candles, what are we going to do next? The next thing we're going to do as traders is we are going to measure the whole of this zone, this engulfing candle from week to week. We want to see if it is a minimum of 18 pips. So we measure it. It's telling me that it's 28 pips. In other news, it has met its criteria, right? Good. So just a second, everybody. I'm going to mute myself out. Just a second. Do not go anywhere. Do not go anywhere. Do not, just stay with me. I'm going to mute myself out. Just give me a second. I want to fix something quickly. Hello, I'm back. I'm here. So I wanted to fix something real quick. So I'm back. Told you I wasn't going anywhere. I was going to be here for you guys tonight. So quickly, now we have it. Minimum of 18 pips. As a matter of fact, 28 pips, like I measured. 28 pips. What do you do next? You take out your box, rectangle, and you box up from this. This is your reference candle now. So I could extend it backward, but this is the candle I am paying attention to. So this, like this. So I'm going to take away this line. I'm going to take away this line. Now, I do not know where this candle is going to break to. Do I care? Nope, I don't care. All right, so we're going to play it now. Remember, I have not put up the indicator just yet. So focus. Play. Stop. It hasn't broken out. It just threw a wick. It hasn't broken out. So let's see. When I mean breakout, I mean it should break out and then close outside of this box that I drew here, not throwing a wick, and it should break up on that particular time frame. So I'm going to select play again, and we're going to see what happens. Stop. Now you can see, did it break out? Yes, it broke out to the downside. Because it broke out to the downside, I will take out my Fibonacci and I will draw like this. That the extensions of my Fibonacci, I am drawing it from the breakout point up until the other end of the box, right? So I have entries. Entries are I'm gonna have entries here. This gives me the best risk to reward. Now I have other traders that want to have entries here at the breakout point. Okay, this gives me the best risk to reward. So even if I'm going to enter from here, I'm going to enter with the smallest of lot I can ever afford to use. Smallest. And here I just go in and I'm ready for the move, right? Down here. So now your first target is going to be here. Your second target is going to be here. And your stop loss is going to be slightly above this line here. Your stop loss is going to be slightly above this wick right here, this one. Slightly above. That's where your stop loss is going to be, right? Now, what do we have here? We have the setup. We don't know what the market is going to do. And this is the reason why I tell you guys that I prefer this zone. Because now, if I do this, if I take a box like this, if I take a box like this, right? And then I clone it. Please stay muted out, please. And then I clone it. I'm going to clone it 3 times. One more time. So I took a box from there. I cloned it. I took it down. I put it here. And then this last one, I put it down here. Now, check. This is my entry. Supposed to be my entry. I mean, this is the highest point I would like to enter from, even though I like to enter in this box. But now, check this. This is what I am willing to risk. But in this case, it's going to be slightly higher. Why? Because of this wick. But then I am willing to risk all of this whole box, and I'm willing to gain how many? 1, 2. So it is more of a 1:2 risk to reward. And then if the market gets to the final target, it is 1:3. But if I take it from here, it is more or less about 1:1, and in most cases it's actually less. I'm actually risking more to gain less. Why? Because of this wick right here. Okay, having said that, we're going to press play now and see what happens. Stop. You can see the market came, picked you up, and did this move. Let's see. Stop. Now, you see that? I can't make this thing up. right in front of your faces. So the market came, picked you up here, came all the way down here. Now I'm going to zoom into this price point here. The market never hit this target. Never did. Never. It didn't hit. So don't get carried away with all this. If it never hit, it never hit, right? So it never hit that target. Then the market pulled all the way back up and you're like, oh man, Trap King, the market is against me. No, the rules are rules. What happens next? The market did this and went all the way down to your target right here. So in other words, the market pulled very back close to your entry, and then look at the move. Now, when the market moved to this point, you are going to move your stop loss to break even. That is, you're going to move your stop loss back to break even down here. Did the market ever come back there? No. And then the market shot all the way down and hit your target. Haven't done that. Now watch the same thing I have done. I'm going to take away this. And I am going to turn on my indicator. Now, look again. 1 second. Do I have 1 second? Not time for questions yet. Not time for any questions yet. Just let me go through it. Then we're going to come to the questions. Okay, chill. When I'm here, I'm going to always take your questions. Okay, so take it easy. Okay, Jay, you good? All right, perfect. Where's I'm looking at somebody on this Zoom. His name is Vitamin J. Is that you?
Yeah, that's me, man.
Oh, that's you. Okay, good. I told you when I was going to be on this Zoom that I'd like you to be here with me. Okay, so are you in a quiet place?
Yeah, it's not me making that noise.
So you're in a quiet environment right now. Is that what you're telling me?
Yes.
All right, good. Now you can unmute yourself. Let's do this together. Is that okay with you?
Let's do it.
Perfect. Let's go. All right. So, guys, ladies and gentlemen, I introduce to you Vitamin J. That's his name. Vitamin J. I've heard of Vitamin A. I've heard of Vitamin V, Vitamin C. But this is the first time I'm hearing of Vitamin J. And we have him on the call tonight. So, guys, let's go. So, let's go together, okay? So, now look at this. Everybody, watch. What did the indicator do for me? You see where I have this color of this candle? If I take it off, there's no color there. It's still my black candle, but I'm going to put it back on. And just so you know, all right, you can change all the colors if you choose to, right? You can change all the colors if you choose to, whichever suits you. Now, look at this. This is your candle. And then, remember I drew a box. Vitamin J, are you with me?
Yeah, man, I'm here.
All right, perfect. Remember I drew a box. Now, this was my breakout candle. I did it without the indicator the first time. This was my breakout candle. You can see what happens here on the breakout candle. Look at the top of the breakout candle. It is pointing, showing me an arrow that is pointing downwards, telling me that that is the candle that broke out from this zone. Now, I'm going to take away this box again. Check. You see this entry here that I told you I like? All these lines, you can actually switch off any of the lines you don't want. Most people like to switch off this one here. That's this one down here. You can switch it off if you want to. Okay, but I want all these lines to be here so that everybody sees it. Okay, so this is the breakout point, this line here, because this candle broke out of this line. Right? Good. Now, look at the first entry here at the breakout point. But like I explained to you guys, in terms of risk to reward, I want the entry up here. What happens? Look at that box I drew there in that zone. That's where I drew it at these two horizontal lines here. These two green lines. So my entry is going to be in this line here. These two in this zone right here. So pick an entry. Coming down, where's my target? Okay, look at this. So indicator tells me that it has hit my target here. But I mean, that's the beauty about the indicator. But manually, it wouldn't have hit my target. I wouldn't have actually believed it, you know. So let's assume that what's it called? let's do it like this. Let's assume that this market did this. This market came, picked you up here, came and hit your first target, right? So you hit your first target, you move your stop loss to break even right here. Now the market has come here and hit you out. You do not care anymore. The trade is no more you're not interested in the trade. I mean, of course, except you feel the market is bearish and you want to trade off of this zone, but that's not what I'm teaching tonight. Okay, so the market is bearish. I mean, the market here hit first TP, hit you out. It's fine, no problem. You've hit a risk to reward of 1:2. Does that make sense? Vitamin J, that makes sense.
Sure does.
You've hit to risk reward 1:2. Now that you've hit that risk to reward 1:2, okay. Now that you hit that risk to reward of 1:2, the market came back, hit you out of break even. I mean, I don't care. I have people that cannot, I know people that can't even catch 5 pips. Would it be okay if this market gave you 28 pips? Knowing fully well when you have people in this world that can't even catch 5. 5 is even too much. Some people can't even catch 2. I see people posting profits on social media, and then when you look at the pip count, it's just 3. We don't count money, we count pips. If you can't catch the pips, I don't care. Count the pips. Let's see what you can do. All right. So now look at these lines here. This one here. All these lines have a meaning. Now remember, I talked about the entry lines. That's this one's here, and this was your breakout line. Your first target happened to be this line here, and your final target happens to be this line here. But I do not like talking about targets without talking about stop loss. I like to talk about my stop loss first. So I went against my rule again. Why is it important to talk about stop loss first? Because I want people to understand that before you pull that trigger, before you hit that lot size in that trade, you need to be aware of the amount of money you're willing to risk. And that can only be determined if you know where your stop loss lies. That is what's going to determine the move. It's not your take profit that will determine your lot size. It's your stop loss that will determine it. Okay, so now you see where I have this line here. This line here. I can take it off if I want to, but this line is actually the top of this reference candle here. This reference candle here. And then this other one above. Now the indicator was designed such that you are going to have 2 lines here. Now the 2 lines is, you see these 3 candles here, these 3 candles here. Okay. Your stop loss, we want it to be above the highest wick. That is how the indicator was designed. So this second one line here is for this one here. This one just showed me that this is the high of that candle. So from here to here happens to be your trap zone. But this other one up here tells me that that is where your stop loss is going to be, around there. Okay, hope that makes sense. If that makes sense, I want you guys to type some ones in the chart. If that makes sense. Does that make sense, guys? Makes sense, Vitamin J. I hope you're still here with me. I hope you didn't go anywhere. Where's Vitamin J? All right. So, all right, let me proceed. So now, the market has hit your target right here. The market has hit your target right here. Now, the rule states that you do not take any other trap, unless the previous trap has completely played out. So, look at it here. This candle here that is marked yellow, any of them that you see like this means that it met the criteria for being a trap in terms of an 18 pip range. But then you also need to understand the rules. There's a limit to what an indicator can do. So if you understand the rules, you will understand the indicator perfectly. Okay, so now it prints out this candle again. But if you notice, the dot it put it only on this candle and not this candle. Meaning that this is still your reference candle. Okay. Somebody could see this and say, oh, your trap king, this is my trap. Because he wasn't paying attention to details. And then this market could play him. Why? Because he was missing the point. The point was this. This is not a trap. This meets the criteria, but it formed inside this one. So this is the one we're still looking at. Okay. So I'm going to go forward. Now that it has hit your target, now you can look for another trap. Where will it form? No idea. So let's see. Stop. Now, do you see the reason why you need to pay attention to details? Now, if you had marked up this trap here and you said, oh, yo, this is my trap, look at what would have happened. Broke to the downside. Well, I mean, it would have still played out because this was like coming into PQ and then this market comes down. It would have still played out. But I believe you guys get the point. That's not your trap. Your trap happens to be this one right here. Okay, so now we have not, the market has not printed another setup. That is why you see these lines are still here and still extending. That's why you see them here. It hasn't printed another setup. Now, if you look again at the chart, the market printed another kind of arrow-like something like this. Look at this purple one here. Now, let's assume this trap didn't play out. Okay, what it tells me is this would have been the candle that hit your stop loss. That is why you are having this printed here. Okay, so I'm thinking of us working on something such that we're going to fix it such that we know the candle that also hit the target, the TP. Okay, but this is the one that hits the stop loss. Just so you know, guys, this is the beta version. Okay, so this is the candle that would have hit your stop loss if this market hadn't played out. But do not get carried away. This market played out, so this was a winning trade. Now, as long as the trap hits any of your targets, it means that it was successful. If it stops at take profit 1 and it reverses on you, it's fine. Okay, the bottom line is the hit take profit 1. Okay, if it stops at take profit 2 and reverses, it's fine. The bottom line is it hit your target. All right, so what is it? So I'm going to say play again. I'm going to press play again, and then we're going to see. So let's see. Nothing. Stop. Now, guys, watch. When I say I want you to engulf a minimum of 2 candles, I mean 2 healthy candles. The most important candle in your setup, the most important candles in your setup are these 2. These are the most important candles in your setup, these 2 here. 1, 2, they're the most important, these 2. They're the most important. Now, you have a bullish engulfing, but if you look at this candle down here, this is more like a doji. Some other brokers or some other feeds could print this as bullish. Okay, so I don't consider this. I ignore it. But I wouldn't have ignored this if this larger candle, as this one that has more meat to it, if this candle was the one here and then this one was here, I would have taken this. But I will ignore this one. Why? Because of this candle. Remember, I was talking about the most important candle in this particular kind of play. All right, so now that I have done that, so what are we going to do? You just mark it up and you wait for it to play out, and then you take the next one. So what do I do? Play. Let's see. You just mark it up and wait for it to play out. You see what it did again? It printed this. Do I care? No, I don't. You see that? Perfect. Stop. Now see. Now look at this. Look at the breakout candle, this one here. This was your breakout candle. But if you look at what the market did next, the market went against you and the market came to hit your stop loss. That's why I don't like this kind of candles. Okay? So let's go to the next one. Now that it's completely played out, then I'll be very comfortable taking the next one. So where's the next one? Trap King, where's the next one? Let's look for it. All right, let's look for it. Stop. There you go. That's the next one right there. That was real quick. Look at that. Real quick. Now look at this. So as you can see, these two lines here, 1, 2. You see this one? Right beneath this candle here, and this one happens to be beneath your reference candle. Now the market prints an arrow to the upside telling me that this is my breakout candle. The moment that breakout happens, that is when all of these prints come into existence. As you can see, this market put a dot here telling you that this is your reference candle. That is the candle you want to trade off of, right? So good. So I'm going to press play. Obviously everybody knows, based on what I've explained to you as risk to reward, right here, right there, based on what I've explained to you on risk to reward, right there. So I'm going to press play and let's see. I can't make it up. Look at that. The market came, picked us up, went to the target. Right? Good. Let's do it for one more. And then I'll go into analyzing what I wanted to analyze tonight. And then we'll call it a wrap. So the next one, let's go. Oh, bullish, baby. I mean, at this point, look here. Look at me here. Look at me right here. I'm out for the 2 pips. I don't care what happens. All of this move, I don't care about them. I'm done. But even though there are some people, you see, the truth is, in trading, you need to have a model. If you do not have a model, then that's when you like to jump in a trade and be like, I have a runner. I am holding this. And you're holding this. You don't even know where we're going to. You're just holding. What are you holding? Can you explain to me what you're holding? And then you see some traders who come out and be like, if you guys held the move, you would have been 500 pips. And I ask myself, did you hold the move? You that told other people that if they held the move, did you hold the move? Any trader you see that says all those things, I think that trader still has a long way to go. A proper trader has a target. This is my target. Once the market hits its target, he gets out. Why? Because that is the model he or she is trading by. Nothing more. That's all. Okay, so let me just do that one more, and I'll call it a wrap. Meeting password 2000. Meeting password is 2000. So anybody want to hop on Zoom? Tell the person. Just share the person the link. Just share the link with the person. That's all. So okay, good. So let's see. The market is still going up. So obviously there's a reason why I stopped there, but right now I don't care because that's not what I'm teaching. All right, good, perfect. Now look at this. Now pay attention to this. Sometimes ugly traps are the best. How many pips is this? 18 pips. Okay. So let's go. Stop. Now let's assume you played off this trap. The market picked you up with this candle, came all the way to your TP1. Obviously, you would have moved your stops to break even, right? Good. So if you see again, it printed this one, but this was the one that you were meant to be playing with. Details. You're paying attention to details. Now let's assume this market didn't hit any of your target, or you went against the row and you did something else. This is the candle that would have hit your stop loss. But then again, the rules of trap, what does it state? It states that if you look here, let me box up here. This candle tells you hit your stop loss, but guess what? It comes back inside the zone, right? As long as it did not close out of this zone here, it means that it's still very much valid. That's if you're buying. That's if another one hasn't formed, or if the market hadn't hit your stop loss, or if the market hasn't hit your take profit. So it means that you could have easily jumped back into this market and follow this market because this market did not close out of this zone. So that's just by the side. So let's do this. So I'm going to do this. I'm going to press play again. Now it has broken out of that side. All right. Obviously, you know what you should have done. So let's see. I said one more. I want to see a proper move. Now you guys look at this. Will you trade this kind of trap? Oh no, I wouldn't. I'm not going to trade this type. Why? I mean, look at this candle is more of wicks, more wick than body. So I don't care. I don't care about this. Any other one that forms is the one I'm going to take. I ignore this because I understand the rules. The candle has to have more body than wick. So there's the next one I'm going to take. I'm going to pay attention to. Okay. So where's play? Stop. There's the next one I'm going to pay attention to. Here was the next one. Listen and listen attentively and follow me closely. Unfortunately, what the market printed was this one. This is why I said you need to understand the rules also. Meanwhile, what the market should have printed was this one. Okay, this one is not even up to 18 pips, so I mean not that one, let's say. Was this one, I printed this one here. But I mean, who cares? I'm not interested in this one. Why? Remember what I told you? It should engulf a minimum of 2 candles. Those 2 candles have to be healthy. If it's going to engulf 2 candles and one is not healthy, then it means that it has to engulf a minimum of 3. The third one has to be healthy. In this case, one healthy, one unhealthy. Okay? So we're going to wait for the next one to appear. That's the next one that comes out. We don't care about all this noise. That's the next one we're going to look after. We're going to be looking out for the next one. The next one is what we're going to be looking out for. Oh my goodness, look at this. Stop. There you go. Beautiful. You see it? There you go. Look at it right here. Now, in this case, look at it right here. Right here, this one. Right here. There's it. That's it there. So I'm going to press play and let's see what happens. Where the market is going to break to. To be honest, I don't care. Stop. So the market broke out to the upside here. To the upside here. The market has come down here where our entry is most likely going to be. Now, okay, let's continue. Let's finish up. Let's see. Good. Now, this was going to, I'm glad that we had one losing one so that you guys understand that it's not all wins. I'm glad we had something that lost. So this was a pure losing trade. This one here. A pure losing trade. This was a pure losing trade. This one here. Okay. So guys, I believe I've been able to explain to you what the indicator is about and how it works. I was actually looking for one losing trade to let you guys understand that everything is not 100%. You win some, you lose some. But would it be okay if you took 10 trades and you won 7? Would it be okay? Somebody talk to me. Would it be okay if you took 10 trades and you won 7? Is that a good deal?
I'll take that all day long.
All day, every day. But some people, the moment they take one loss, they're like, oh man, it's not working. No, stay focused. You are not here. We're not in a marathon. We're not in a sprint. We're in a marathon. Okay? You are not come to fight battles. There's a war here. You have to win the war. So you can win individual battles, but there's a war. What's the end? What's the end goal of the war? To be profitable. So in those battles that you are fighting, you're going to win some, you're going to lose some. Anthony Joshua is the world heavyweight champion, boxing. Did he lose some fights? I remember one he lost to one plump dude from, I think, Mexico. He lost. But he defeated the guy again, and he's still the champion. He's still the champion. So guys, I need you guys to understand. It's not you. If you lose one battle, if you lose one trade, you don't need to sit back and start sulking. No, pick yourself up, dust yourself up, and go on to the next one and take your money. Simple and short. Okay? I hope that makes sense. What I've explained to you guys tonight, does that make sense? I hope it makes sense before I go on to the next stuff. Does that make sense? Makes sense. Everything I've done tonight, does it make sense? Somebody talk to me. All right, perfect. So now I'm going to take away this indicator. I want to do something, and this is just a bonus. And when I'm done with this, then we'll let you guys know how you can go about getting the indicator. So this is just a bonus. I want to do something. So I'm going to go over to, this is GBP USD. I'm going to go over to the monthly time frame. Should I go to the monthly? Hold on. Let me see. Okay. Let me see. Wait, hold on. I guess I have Tana. Tana, are you on this call? Is Tana on this call? I guess Tana is on this call. Tana said was going to be here with me, so I'm not sure. I need him to help me do something right now. I mean, okay, perfect. I've seen it. So I'm going to add something here. I'm going to add. I'm going to add perfect. Good. That's what I was looking. I want to add 8 hour. Can you imagine? We have 1 second, 5 second, but I mean, who trades here? So I was looking for the 8 hour candle. So 8 hours. There you go. 8 hour candle. Now this is GBP USD. Sharp King, what are you up to? I don't know. Let's find out. So I'm going to drop this right here. That was the highest point. So I'm going back to the candlestick. Right here. The highest point here. The market came here with. Now, everybody, I tell you guys, listen to me and listen carefully. When I'm talking about support and resistance, I let you guys understand that there's no valid support and resistance if you do not have bearish engulfings or bullish engulfings or inside bars in those zones that signify supply and demand zones. If you do not have them on those zones, it means that they are not going to hold weight. They are not going to hold weight. Okay, please focus on details. They won't hold weight. So it means that they're not going to hold weight. So now look at this. I mean, you guys will come. Oh, yo, trap came. This resistance. The market came. We tested 1, 2, 3, 4. Oh man, look at this. And then your educators will be telling you that, oh, you wait for a break and close above resistance, which happens to be where you have this line here. Wait and close above, take a retest and buy the market, ladies and gentlemen. Close above, retest. Oops, they took your money and took you the other way, right? Good. Now, what makes this zone valid? What makes this zone valid here happens to be the fact that this bearish engulfing formed here. Now that bearish engulfing formed there, I'm going to do this. I'm going to do this right here. I'm going to take away this line because I don't care about this line anymore. Okay, I'm going to do this right here, right here. So this market has more room to the downside. This market, even if it pulls back, I want to see this market come down here and eventually down somewhere here to take away all of these points here. So about like 150 pips to the downside. GJ did what we expect, what we're talking about, but I don't know why I was focused somewhere else. All right, so I'm going to put this away. So I'm going to leave this here. Now let's go to DXY, dollar index. DXY, US dollar index. Let's go to DXY. I really don't come here, to be honest. I really don't. Why? No idea. I just don't come here. All right, there you go. I'm excited. Again, look at what I'm telling you. Trap King, resistance. Resistance here. Sorry, support here. Trap King. Support here. Trap King, where again? Support here. I don't care about any of those kind of supports. Something has to validate my support. And what has to validate my support? This is what is going to validate my support. This kind of move. Remember I said, you want to see supply demand zones, inside bars, bullish engulfing, bearish engulfings. You want to see them on that zone. So let's assume you said, oh, the market is going to come here and buy. Guess what the market did? Psych, the market came here, came down. Oh, psych, the other way, went away. So hit your stop loss. Now that the market has done this move, okay, I believe today's the market is closed for the day. So the market is closed for the week. Now that it has done this move, if you look at this candle here, this one right here, if you look at this candle right here, you see this move? If I go to the higher time frame, this will be a bullish engulfing. Let's find out. Week. It should be a bullish engulfing. Or does DXY not? Anyways, let's put it aside. It should have been, but it wasn't. But that's fine. But if you go over to the weekly time frame, now you know your support is going to hold here. Whatever support you had there, you're going to tell me it's going to hold. Now I can agree with you. Why? You have a bullish engulfing here. Okay, so eventually what the market was doing was the market was reaching for this point here. And that is why the market did this. It was reaching for this point here, which is fine. It makes sense to me. It makes sense to me. It makes a whole lot of sense to me. That's where the market was reaching for. Now the market has done this. Now that it has done this, let's see what it has given me. Perfect. So what I want to see on this market is, go back to the daily time frame. What I want to see on this point here is, I want to see this kind of move. I want to see the market do this. I want to see the market come back to this line here that I marked here. And then I want this market to buy. So what I'm seeing on what's it called on DXY is, I want to see DXY. This is going to be pretty interesting. As you can see, this was a low. This was a higher low. As in, I mean, hold on. Let me change it for you guys. So that you guys see it. See that? Low, higher low, higher low. So you see what it's doing? I mean, the market was going down, and then the market now starts doing this. So going back here, this is what the market is doing. So I mean, what I want to see the market do is, I want to see GXY come all the way here. I want to see dollar come all the way here. I want to see dollar come all the way here, and I want to see if it's going to break this high. When is this going to happen? I don't know. But that's what I want to see. That's the next set of move I want to see happen on this pair. Because like you see, there's nothing stopping this market from making this move. I mean, look at continuous bearish candles. So what the market did to the left is going to do it to the right. It will always do that. Okay, you think it's a lie? Let's look to the left. Look at this. The same thing happened here. The same thing happened here. Went up and cleared all of them. And then when the GXY clears here, and then eventually clears this high, then that simply means what's going to happen next? The market is going to go all the way up and take away all of this here. But let's focus on what we're looking at right now. Okay, this is what I'm seeing on DXY right here. Here. So I'm going back to the 4 hour. Let me go to 4 hour time frame. On 4 hour time frame, what do I have? All right, this is interesting. This is perfect. So on 4 hour time frame, this is what I'm looking at here. Bull candles. I want to see the market come down into this zone and then buy. How is that going to happen? See from here to here. Let's see. I mean, the last point of call could be down here. This down candle here. This is the last point of call. This down candle here. I want to see, once to get here, I want to see an instant rejection here. This on 4 hour time frame. Instant rejection here. But I want to see the market play around this zone and go all the way up. So let's go back to GBP USD. GBP USD. Let's go back to GBP USD. Oh. So on GBP USD, I'm going to go over to the weekly time frame. On the weekly time frame, let's see, let's look to the left. What do we have? Oh, there you go. GBP USD, weekly time frame. I tell you guys these things. Weekly time frame on GU. The market came and formed the resistance here. Bearish and engulfing. Now you're talking to me. If you tell me these are the kind of resistance you're going to sell off of, I like it. I'll be interested in taking a look at that. Okay. So this is what GBP USD did here. The market came here again and threw a wick. Oh, really? Is that what happened? Threw a wick and left. So there's a reason why the market is running away from here. There's so many orders here. That's why the market is running away. So the time the market is going to eventually come here, it's just going to blow through this zone. But I don't see that happening now. I see that happening maybe later. So let's focus on what we're having on what's it called? On GBP USD. Let me see what the monthly has for me on GU. Let's see what the monthly has for me. Okay, not interested. Go back to the weekly. So this is what the weekly is showing me. The weekly is showing me this candle here is very important. So let me go over to the daily time frame. Now on the daily time frame, how did I come about this price? I tell you guys the same thing. It's over, it's there in your faces. Look at this. Resistance right here. Resistance, resistance. What do you have here? Bearish engulfing. Is it going to hold? Yes, it will. Resistance, resistance. The market came back here. Why did it come here? You can only see that on the lower time frame. Let's find out. In this whole thing I'm doing here, you see this? Resistance again. What do you have? Bearish engulfing. Meaning that this market could come up, this market could easily come back to this place here. And then we'll sell again. Resistance. If you tell me this is resistance, I agree with you because of this next candle, right? So I'm going to keep it there. This is on the daily time frame. So let's go to the 8 hour and see what we have. Whether it gives us much to be desired. Is there much to be desired there? So 8 hour time frame. Good. That's what I was marking up earlier. So 8 hour time frame, look at that. Bearish engulfing. That is why the market came here and fell. Okay. Let's see. 4 hour. What does 4 hour give me? So let's put it like this. Let me change over to this. Let me change over to this. So look at this. High. Lower high, yeah? Lower high, right? I'm going to keep that there. Now, the market was doing this. Low, lower, low, higher low, higher low, higher low. You see that? That's what the market was doing right here. Now, I don't use trend lines. I'm just trying to use that as an illustration. So don't get carried away with the trend lines. I don't do that. Okay. Now, I'm just showing you market structure. Now, the moment the market did all this and came down, what was the market coming for? The market was coming for this low here. That's what the market was coming for. The moment the market took out that low, guys, over. Trend has changed. Trend has changed. That's what I said. Trend has changed. I like this one here. The moment the market took away this low here, this point, when the money broke through this, it means that the trend has changed. So I'm going back to the candlesticks. Trend has changed. I mean, there's nothing stopping it. You see that move all the way down. So now let me go back to the 4-hour time frame. Remember what we did on DXY? We said we want to see DXY continue to rise. GU, want to see GU continue to fall. How are we going to catch it? You see these points I marked up here? That is exactly how we're going to catch it. Now, I'm not saying when the market opens, you jump in. No, you need to understand price action. And that price action is going to happen on the lower time frame. Now, people in no risk FX understand when I'm trading like this, they know what time I'm looking at. They know what are the signatures I'm waiting for. They understand it. Okay. So these levels are levels of interest. As a matter of fact, I'm going to take away this one. I like this one better. Why? Because of this engulfing candle here. This engulfing candle was violated. So I want to see the market come here. And then if this market comes here, here, I want to see the market go all the way down and take away, come and fill up, take away this whole low here, this one here, come down here, come all the way down here for the first objective. And then let me look at where we're going to on the higher time frame. Just a second. Daily. Okay, I'm correct. So on the daily time frame, where are we going to? We're going here. We're going down here. This is what we're going to. On the daily time frame, that's what we're going to. So 4-hour time frame, let's say. 4-hour tells me what's there on the 4-hour. Let me put a horizontal line there and find out. What is here? What is here? What is here? So there you go. Support. What you guys like to call support. But look at this. Bullish engulfing. I like it. Can the market come down and react? Why not? The market can come in and react. It can easily come down and react. But if it blows through that zone, guys, it's gone. It's gone. So right now, I don't see anything stopping the market. There's no form earning. I want to see what I want to see on Mondays. I want to see this market wake up, pull up into the zone, give me my signature move inside here, and then I'm all bearish in this market from here all the way down here for about 200 pips. I'm going to pay attention to this pair very well. There's nothing. It has broken all the levels that it was meant to hold it. So it has broken them. And 1 second. Let me put something. 1 second. Okay, good. I like it. I like it. I like this place. I like this zone. I like it. Let me do this. Let me do it like this. I like it. I want to see this market come inside here. If it comes inside here, I'll be looking for sell opportunities here. So, guys, what I have just done tonight is I have just given you guys a trade idea of what I'm looking at for next week. The trade idea. This is about 200 pips, I guess. Yeah, 200. I think it was about 200. So that's what I'm looking. That's what I'm looking at on GU. So I'm looking at on GU. I predicted this whole move to the upside. I don't know how my team. I didn't catch it with them. So the only reason why this market stopped here is because what are they trying to do? The banks are trying to offload their orders. Why? Down here. What they're trying to do is for the people in this sell candle here. This sell candle here, they're trying to offload their orders. So we're going to see some level of action here. And then the market is just going to blow through that zone. We're going to see some level of action here. This candle, they want to offload whatever is here. Whatever buy they bought here, they want to offload it here. So they want to offload it. So you're going to see some reaction here before the market will come back here and then continue to the downside. Okay, so before I proceed, do we have any questions? Is there any questions before? And do we have any questions? Any questions? So I'm going to count to. Okay, somebody want to say something?
Oh, sure.
Who's that? If you want to say
Sorry,
something,
sorry, Trap. That was me. Back to your indicator, the traps. When you talk about take profit one, take profit two, how do you know, like, when do you take profit one or wait for take profit two?
how do you know when to take profit one or wait for take profit two?
Yeah, yeah,
I mean,
yeah.
you don't know when to wait for take profit two, but you just need to follow. If you're going to trade traps, okay, just follow the rules. Keep it simple. When it gets to take profit one, move your stop loss to break even, and secure partials.
Okay,
And then
so
and
that's
then
what it
you're
is. Secure
yeah,
a
and then
partial.
yes, and then you leave that runner and see if it's going to get to take profit two. If it doesn't, then it's fine. If
Okay,
it does, then why not?
nope, that answers that completely.
All right, so you're good.
Yeah, I'm sure I'll have a few more
So
like that.
vitamin J is good. So any other question, you know where to hit me up. Okay. So guys, since we do not have any questions, I'm going to leave the floor open.
All right, TK, what's going on? What's going on, TK? Can you
Yes,
hear me
sir.
loud
I'm
and
good.
clear?
I'm good. Loud and clear. Let's go.
All right, what's going on, folks? Hey, welcome. I appreciate each and every single one of you guys for jumping on today. And as we promised, the gift that we're going to be giving out. But before we go there, let's go ahead and give a hands up to TK. Let's drop some ones. Go ahead, chat. Let's blow it up. Let's drop some ones over here for TK. Yeah. Oh, I love that. Look at that. Wow. Beautiful, beautiful, beautiful. I'm so, again, so excited and so glad that each and every single one of you guys had made it on here today. And, it really takes an act of action to be a part of something. And we're really trying to, bring something to the table where it's totally different. And there's a lot of softwares and programs and teams and companies out there. But there's the great part of this whole thing is that Trap King has taken many years to go ahead and create his strategy and his style. And now we've gone ahead and implemented it and put it into a piece of indicator or software in its way to go ahead and help you guys take the most profitable and most successful trades as often as possible. And that's a great thing about what we do here at No Risk. We're just going to keep continuing to innovate and everything. So right now, this is a beta version of that. So we're doing the beta version of this engulfing traps right now. So give it some time for us to go ahead and finish the development of it. But that's why we're doing what we're doing right now and giving it away for 30 days for free. Everybody, it doesn't matter where you're at, what you trade, what team you're in, what business, your other business you may be in, and we're giving you guys the access to the engulfing trap strategy for the next 30 days. But to get that trap strategy, you're going to have to go ahead and click on the link that I just provided. I just dropped it right there. It's in the chat. Click on the link and just follow the steps right there so that you guys can get send in your application, because we have to do it in a manual way. So we have to go through it, each individual person, and import them into the indicator so you guys can have access for the 30 days. But so just go ahead, click the link. How about this? Let me even ask a better question. How many of you guys are interested in it? Go ahead, drop some twos, some twos. Two. I am. Okay, cool. All right. Well, then that's perfect. That lets me know that there's that much interest in wanting to be a part of this. So again, anybody that's on here, that's our gift to you. This is our gift to the world, to the public. We want everybody to go ahead and get access to it, play with it, give us back your feedback, give us back all the information that you think that can help better this actual indicator, because everybody has a different strategy, a different style, and a different way to look at the markets. So us knowing and looking at it through your eyes as well will definitely help build the indicator to only be the best and be the most optimal for you guys, so that you guys can continue to be successful. And if it wasn't, again, for Trap King bringing his brain, putting it together, and the blessing of God, of course, to put it all inside of his head so that he can go ahead and create this. This is awesome. And we just know that we're pushing forward. We're trying to build something so that you guys can have more success in it. And we just really appreciate you guys being on here. That's why we're giving this away. So again, thank you guys. Thank you each and every single one of you for being here. And again, we do have in our program, we have an affiliate program. So if you guys ever choose to never ever want to even join, but you do see something that you can share with others, sign up for become an affiliate. Become an affiliate, share our business, share no risk with the world. Let them know that we're not playing. We got something coming, and we got a lot more coming this year, so that we can make sure, again, not just only in Forex, we have other things outside of Forex that are, be able to help generate income, because our vision is not just Forex. I mean, that is a big focus of it, but we do have a vision of just being an entrepreneurial company that allows people to do multiple different things and still generate revenue. So keep that also in mind, and becoming an affiliate will also allow you to be another way of generating revenue without ever going ahead and being a part of actually no risk in that way. So again, if you're not an affiliate, I highly recommend just visit our website, noriskfx.com, click on the affiliate button, become an affiliate. And hey, we're paying out 50% right now. So 50% is kind of an unheard of number. The industry standard is about 12% to 15%. So we want to take care of you, and we want to give you guys that push to be able to use your same income that you create out of the affiliate side to put back into your trading aspect. So, now you're not spending money out of pocket. You're actually using your own income and generating profits from affiliate into Forex and generating profits in Forex. So once again, thanks again. I appreciate every single one of you. Thank you, TK. And I'm going to give the floor back over to TK. Again, click the link, fill out the application, follow the steps, and we'll get back and set you all up within 24 hours. Thanks again. Appreciate it. Right back to you, TK.
All right. Thank you. All right, guys. So make sure you click the link. And I'm seeing somebody asking a question that what's the best session to use it. I mean, to be honest, you can use it any session. All right, but you need to. I have been teaching people in the no risk FX. I have been teaching them what time there are particular times of day that the market is going to make those moves, and that's when you know whether you're in a win or you're in a lose. It's not going to waste your time, okay? And but you can use that any time of the day, okay? Any time of day. As you can see, what I'm doing, I'm just trying to play with this a bit. So this formed a resistance here, like I told you guys, resistance here. What do you have here? Bearish engulfing. The market came back and retested its engulfing, came all the way down. So what's going to happen is I want to see this market shoot all the way up here, come back and retest the zone, and then most likely going to sell the market from here. But I'm not just going to put a sell limit down. Wait, nope. I'm going to wait when the market gets there, and I'll come back to the 5 minutes time frame and look for my signature moves, and then I'll take the market from down there. So this market, a potential of I think about 24 pips for a move of let's see. Oh my goodness, will it be okay if 24 pips? This is like a risk reward of 1:8.5. If the market does this, 1:8.5. This market does this, ladies and gentlemen. I don't know what to say anymore. All right, guys. So thank you very much, team, for being on Zoom tonight. Thank you for being on Zoom tonight. If you have any questions, do not hesitate to reach out, ask me questions. You can send me a message on Discord. You can send me a message on Telegram. Wherever you know I am, you can send me a message. Even on Instagram, you can drop your messages there. I'll respond to all of them. Okay. So guys, take it easy. See you guys on the next one. Good night.